It is 20 after 4 on Channel Africa. You with Poppy and Ntsako, and we are chatting about owning property without a bank loan. Joining us now is a 29-year-old entrepreneur and CEO of Libertalia Group, founder Mhlonishwa Winston Kunene, who believes property ownership should be accessible to more people, especially young people. And that's why we're so excited to have you in studio. Welcome to the show, Winston.
Thank you so much. Thank you for having me.
This is quite a novel concept, but we've all been struggling with property ownership across, color barrier, and also because there's young people. It's about employment as well, whether you're a freelancer or you've got a regular job. Why did you decide to take this on?
Okay, so just dating back to my situation, I'm 29 now. My first property ever was 21 when I got it.
Sheesh.
It was, and then it was repossessed later on. And especially not even during COVID, just after COVID.
Okay.
I struggled with managing the property financially. I made a lot of mistakes. So I then fixed myself, obviously, repair and do all of these different things. But then I thought about it. I was like, is there another way of possibly getting property ownership now that my credit was dent, especially at that time?
Okay.
And I consulted a couple of attorneys, and there's ways. There's installments of sales, there's refinancing models, there's usufructs, which is like full control of a property until you die, but you don't own it. There's things like that exist in the market. So, and I did more research on it, I did more reading on it, and then I actually implemented it myself, and I started acquiring properties ever since.
Wow. Properties.
Yes.
Did you hear that application? So let's talk about the past versus the present. The past, our parents, grandparents, they purchased properties with cash, and I think that was one thing that we all aspired to have. Of course, we all weren't in our 20s and 30s in 2008, which was the perfect time.
Yeah.
But what happens now? I mean, a lot of us are generating money on our own. We're running our own businesses, or us ourselves are businesses as Africans. How do you navigate kind of setting your finances up to purchase a property and to be eligible to purchase a property?
Okay, so there's the traditional way of purchasing property is just to have a good credit and having the affordability. I always say even someone earning 5,000 rand per month has access to property ownership. Yeah.
Sure.
Yeah, there's even subsidies from the government for first-time homeowners. They call it the first-time finance, first home finance. They can give you a subsidy of up to 170,000 rand for your first property. They've got different criteria around that, and I understand why the market currently we have a huge shortage of housing.
Okay.
Yeah, it's about 3 million homes. That's the shortage. And when you talk about shortages, you're talking about probably 12 million people are affected. There's over 4,000 informal settlements. So there's a huge demand for housing, and to go back to your question, so I think banks are obviously, they use a criteria in terms of risk and everything, but for them it's mostly, if we give you a home loan, are you able to pay for it every month? So do you have the affordability of an income? And then it goes as far as when we give you a home loan. So let's look at your previous finance facilities. Let's say, for example, you took a phone on contract. Have you been paying it on time? So if you don't pay me on time, or you miss some of the payments, you default your name, it appears on the reunions, and the banks will say, no, we're not going to give you money. Even when you have the most money to afford the property, you won't necessarily get it because of that. So mismanagement of finances is one thing that hinders us from access to property ownership.
Sure.
So, but besides that being the point, obviously we need to educate and raise more awareness to consumers, and for people to be aware that actually, if I take care of my credit, my payslip is power. We need to understand what we mean by that. But then also going back to some of the, there's not everyone is a salaried. You don't get a salary every month. In fact, I always make a joke, but why would banks trust someone that I, as an employer, pay a salary every month? You should be trusting me. I'm the one that's paying the money.
True.
But I must say the banks are very, very lenient towards salary earners. But when it comes to people that run businesses, contractors or short-term contracts, influencers, they're not so easy on us. We are high risk. So you look at those things, and it is true. Sometimes you might find yourself, as an example, a business owner who has a couple of contracts coming in, and then the clients pay late, and they've got obligations, financial obligations, and the moment they start defaulting on those obligations, it actually affects the business owners. So it makes sense from a risk point of view, and I guess that is why then I saw that as an opportunity. You know, a lot of people have money. The affordability is there, and I think the problem here is the banks are just not going to give them home loans because they don't have the necessary credit, right? So to show for it. So, but as much as that's the case, how do we then, disrupt the market? I call it disrupt the market because I still believe that a lot of people don't know about this. You can come into I'm diving deep straight into like
please do
like
you're
home
answering
ownership.
the question.
You can literally, without a payslip, without a source of income, without proof of income, without good credit, you can actually own property.
So let's talk about the quality of the property, because I also think that's what we need to understand. So what is this property that we're talking about? Is it residential? What are you saying that we can own, for instance, for 5,000 rand? Because I also think that people don't understand what you mean when you say property. Is it the house that I'm going to live in? What is the property scale in terms of what we're looking at?
I love that question. It's any property. You can look at the luxury market. You can own a house in Stain City.
Okay.
With peanuts and raisins.
Obviously, we want to mitigate those kind of risks. We don't want people with peanuts to go and own properties in State City because they'll get kicked out the following month. But basically, in terms of brackets, you can start from a room for 2,000 rand per month. In terms of the previous owner, the current owner that's paying a bond repayment of 2,000 rand, you can take that over. 5,000 rand, 10,000 rand. You go up and up and up. Basically, in the residential space specifically, this is where people can then navigate themselves around these kind of contracts. So it's called the installment of sale, right? It's literally in the government gazette. This is like regulated. It will show you exactly how to own the property. It will show you exactly what terms you can include in your contract. And you can even you should use a conveyancer to assist you as well with the registration. So this is totally different from like rent to own, where in rent to own, you get into a lease agreement and you say to the owner, I'm going to rent here for the next 10 years, but can the purchase price, can my rental be deducted from the purchase price? You've got those kind of agreements, right? But with installment of sale, we're saying within 3 months, your name will be registered against the title deed.
Wow.
I love the shock.
No, because honestly, you're speaking to especially the people in like our age group, right? I mean, we've made so many mistakes. We were never taught about credit scores. We were never taught about how to navigate our finances. They kind of just said, earn money, buy a house, buy a car, get married, have 5,000 children.
Sure.
We were not told about, kind of the nitty gritty of the fact that you are able to kind of bounce back.
Yeah.
And especially after COVID, a lot of people lost their jobs. Credit was bad. So what kind of is like I don't want to say red flaggers per se, but what are some of the barriers to entry with this? Because I know that even as great as it sounds, what are some of the things that we also need to be cognizant of getting into agreements like this?
Okay, very great question. So I think from an investor's point of view, from like myself, where I go out and I speak a lot about this, where I say I've never had to put down any deposit or whatever the case may be, and I got the property. I do need to be careful, especially when you're a public figure. You don't just throw words around and people follow through. So I'm glad that you're giving me the opportunity to clarify that, right? If you go to an owner that's distressed right now, whether it's a divorce sale, because that's a real thing, there's a huge demand for a wife and a husband saying, okay, I'll inherit the house, but I can't maintain it, or no, let's just get rid of this house, or whatever the case may be, right? So the divorce settlement, they in most cases, let's get rid of the house. That's usually what they opt for.
A lot of the time,
And you can go into those kind of agreements because how do you even have access to these kind of properties? It can be any property, and I guess the one thing is it's unlimited options, right? But once you get into that kind of agreement, regardless of whether it was a distressed sale or migration or or about to repossess their home, there's many factors, right? But let's talk about the actual legal agreement. Should you now get into the situation where you're saying to the sellers, the previous seller, you're the buyer, right? You're saying, hey, I'm in the business of properties. I'm a property investor. I want to take over your property. So there's an agreement, the Land Alienation Act. It's called the Installment of Sale Agreement. It allows you to endorse my name against the title deed of your property conditionally, meaning I take care of everything. So you're talking about your levies, your municipal rates, your bond repayment. I'll take over and you stop worrying about the property. Obviously, the terms are very, very specific. You've got minimum of 5 years to pay it off. You can still negotiate with the owner 5 years later to still extend it.
We're going to continue the conversation with Winston Kunene, who's chatting to us about how we can own a property without a bank loan. Keep it locked right here on Channel Africa. It's 4:30. Let's get into sport now with Figile Lingwati.
19 minutes to go before we hit 5 p.m. Central African time. Joining us in studio to talk all things owning a property without a bank. Imagine that. Is Winston Kunene, who is the founder and CEO of Libertalia. So we were talking about, it sounds great what's happening, and I really am happy for anyone who's going to be pursuing this. However, you need to also be in a position to kind of, be the best candidate for a process like this. Talk to us about what red flags one can possess that will hinder them from, pursuing this successfully.
So especially for as much as we are educating the consumers, the buyers, right, on this, which is great, it's disruptive, raising awareness. I think it's important to also inform the sellers that are going to be selling these properties to look out for those red flags. So I like that you asked that question. We don't want a situation where someone says, oh no, I'm earning 10,000 Rand per month, but I'm looking for a property that's valued at a bond repayment of 20,000 Rand per month. You know what I mean? So we obviously, our affordability is quite a serious thing that the sellers need to look out for.
Okay.
So these are the criteria that the banks actually use. And maybe the nice thing about this process is you've got that flexibility to negotiate with an owner, because you can't negotiate with the bank. So can they afford, for instance, 30% is the rate you calculate for someone's affordability. So it's 30% of their disposable income.
Sure.
So for example, what this means is if I'm earning 30,000 Rand per month, my 30% disposable income should be 9,000 Rand per month. So I should be able to afford a property that's valued at, these calculators, right? If I'm paying 9,000 Rand per month on my disposable income on a property, I'm most likely paying, so the 1% rule, 900,000 to 1,000,000 Rand per month. Purchase price, the value of the property, because I'm paying 9,000 Rand per month. Okay. So those are just some of the calculations that the sellers can look out for. This person says they can afford, they want to take over. As desperate as I am, because it speaks to distressed sellers. As desperate as I am, will this person be able to afford to pay for this property? Because the risk associated with that is the bank can consent that you endorse this person against the title deed. Because the banks are happy that someone is going to service the bond. So it's a continuation of
the money that
they were getting. The problem starts when the person starts defaulting. Then the risk there is the bank will then go back to the previous owner and say, the person you endorsed on this property is not paying us anymore.
Hey.
So now what are we going to do?
Let's chat about your masterclass and what you're trying to do there, because I think it's very important. We need the information, we need to be educated, but we don't know what we don't know.
Yes,
so
absolutely.
What is the masterclass about, and what are we going to get out of it if we do come and attend?
Okay, so I've decided, let me launch a virtual masterclass so everyone in the province has access to it.
Yes.
And because I know the video that blew up recently, I think it's sitting on 1 million views now, and all the comments are like, I want to buy today, I want to buy tomorrow, how does it work? So I think it's important that I can't service everyone. So I thought, let me come up with a property masterclass that's going to be on the 8th of August. It's only 300 Rand. And I'm going to give everyone a comprehensive masterclass, 4-hour masterclass, on a structured masterclass on how everything works step by step.
Okay.
From both the buyer and the seller's perspective, and as well as from both the investors and just someone who just wants to own their own home. So
where can we get these details of the masterclass?
I'm gonna put up a poster on my socials. So Winston Kunene. I think maybe people can just follow me on Instagram, Facebook, TikTok, and then I'll obviously put it out everywhere on my socials. It is also on my website, my personal website, winstonkunene.co.za. And there's a section under events, masterclasses, and people can register on there.
Chat to us. I'm interested about what's happening on the African continent from a property perspective.
Yes.
What have you observed? Who's buying property, and what's happening for the conversation that you're having specifically on your masterclass? What is happening in the continent?
Okay, so I think let's look at affordability. Let's start with affordability, right, from an economic perspective.
Okay.
The interest rates back in COVID were quite low. Your prime lending rate was like at 7%. The prime lending rate right now is sitting at 10.5%.
Okay.
It's gone up. Inflation has gone up, especially after this fuel and inflation going up, right? So what that has done is, yes, people are able to afford property in terms of how much they're earning, but they can't keep up. Because the interest is just keep going up and up and up. So basically, if you were able to afford a property valued at 10,000 Rand per month, and it's gone up from 7% prime lending rate to 10.5%, it's up by 3,000 Rand. So now you need to go and find that extra 3,000 Rand out of your own normal budget. That's what it's straining us. It's killing people's budget. So affordability is such a big thing, and I see the property demand is going up, right? Investors. So when I talk about investors, even property developers, you look at your Growth Points, your Balwin Properties, all these big companies, they're still doing developments each and every day because they understand the shortage of, housing. Banks are still giving 30-year mortgages. I don't know if you guys know of 30-year mortgages. Is a thing. People think it's just 20 years, and you can increase your mortgage to 30 years with the banks. Banks are still saying, "Oh no, we'll give you guys to pay us back in 30 years." So the market is growing rapidly in Africa. I'll speak to South Africa in specifically because that's the market I operate in. But I think from a holistic point of view, I think there is always, population has always been a thing anyways. So it goes hand in hand with housing and accommodation. So the more people we have in terms of population numbers, the more demand we need for housing. Okay, so, and I also look at it from a and not just from a residential point of view, even from a commercial point of view, we're doing pretty well. More companies, international companies, are investing in Africa, right? So they are coming and they are putting their bases in Africa, and that creates more job opportunities. And because of that, there's also a demand for commercial real estate. So if you're a commercial developer, develop commercial, put offices and rent it out to all these international stakeholders. So there's also a demand there. So you'll never go wrong with property. I'll always say you'll never go wrong with property. I think the thing we need to look into is just management. We need to work more towards management. And lastly, by the way, I there's another topic I want to discuss, but we don't have to discuss it today because it's a separate topic. Short-term rentals, so Airbnbs.
Yes. Oh my word.
It's such a thing now in you're talking about African economy. It's such a thing now where short-term renting is, the confidence is there. People are now participating, and when you look at Airbnb itself and the model itself, it's actually been there since 2008. It's not new, but now people are starting to get the hang of it. And these are the things when we talk about, okay, we see there's a demand for housing, but there's a problem with affordability or sustainability. Let's look at alternatives. So instead of getting the traditional tenants that pays you one rent for 12 months, let's look at things like high risk, high rewards, like short-term rentals. You charge 1,000 Rand per night or 500 Rand per night, and it just accumulates, and then you start affording your bond. So these are some of the things that consumers need to start looking into as well in terms of the market.
Honestly, absolutely exciting stuff. That masterclass, if you find me the first one logged in, do not be surprised. But generally, there is a hunger. Thank you so much for joining us on The Upside on Channel Africa.
Appreciate it. Thanks for having me.
Thank you. It is at 10 to 5 Central African time. Let us know your thoughts on @Channel Africa 1 on all social media platforms. We can all own houses and homesies.